Good morning, traders. It's Wednesday, February the 5th. Taking a look at the charts, we've got a continuation rally in equities from yesterday. We had a huge pop yesterday in the markets, continuing to push up. We're getting up to this level where it's trying to potentially put in a double top or break out to the upside, and we'll see what kind of traction we get. Now, if we take a look over at our momentum charts here and our trends, if you take a look, there's gold and then SP 500 in the middle, and then bonds. And if we just take a look, gold yesterday, the little green hashtag is right here. Gold ended up getting oversold, trading down in this level. It actually recovered to close at that level yesterday. And gold's trading slightly higher today. Overall, it's oversold, and our short-term cycle is kind of bottoming out. So we could start to see gold have a little bit of a bounce, maybe up to the 20-day, maybe a little bit higher, or consolidate here. Overall, it should hold its ground fairly well today. Now, if we look at bonds, bonds have got a cycle bottoming out. Our green hashtag is right here, the oversold level. So we didn't quite get down to oversold. We got close to it. Today, bonds are trading a little bit lower. They're actually trading just below that level. So now we're getting into a point where bonds are similar to where gold is in terms of short-term oversold, cycle low, and we might see a little bit of consolidation or bounce here for a little bit. Now, the equities market had a huge gap up yesterday and then continued to hold. Today, it is set to gap up higher. I think it's trading somewhere up here around the 330, 332 is where it's more or less it's trading at, just a little bit below there. So overall, our red hashtag was right here. So we are trading deep into the overbought market condition. We're into these previous highs. We do have a cycle high. We'll see if the market will end up putting in some type of big sell-off or reversal back down to squish this price, pull it back. Overall, our trend analysis is red, indicating the bias is still to the downside. And this more or less, we've got two big pops, and this will be the third big push up into resistance. It's gone pretty far, a little too quick, and I wouldn't be surprised if we see some selling at some point, maybe late in the day, the second half of the day, or the following session or two. But overall, we'll see if it starts to break out to these new highs, and depending what gold and bonds do, if they start to, and the utility sector for that matter, if they all continue to move lower, and the equities hold up, the momentum and the trends are going to shift. But right now, these trends are still in play. We should see gold and bonds hold their ground or move higher, and we should see the equities market continue this chop in the market. Now, if we go back to the daily chart, we are getting into this type of price action right here, where the market goes from extreme oversold and then to an extreme overbought. And of course, you get most of the strongest rallies in the stock market happen during downtrends. You get this huge wave of buying, you get a huge wave of bargain hunters piling in, you get short covering, and so you get these really, really strong moves to the upside. And the big question is, are we going to break to the upside and continue to go higher with the Trump impeachment potentially coming to an end here? Or are we going to see this go back down and we start to see the market do this big sideways chop and create more stress in the market? And if that's the case, bonds should continue to move higher along with metals, and then whichever way this breaks will be a significant breakout, and we should see a significant rally or a breakdown depending on which way it breaks from there. So we're going to see how things play out this week. We talked about it's going to be a real pivotal week, and we'll see which way the market breaks and which way the trends go. You can see short term, our momentum and short term cycles are overbought for the equities market. Our short term, our intermediate cycle is turned back up, but it can do that and very quickly just reverse back down. Overall, we are somewhat in a downtrend still, although we're testing these highs, and that could change very quickly here. Within one or two sessions, the trend could flip back to the upside. Let's take a look over at utilities real quick. Actually, let's go to bonds. Here's bonds. Bonds are down 0.5% this morning. They've had a nice run. They broke out of this support zone. If we just draw across here, we broke out of this area, and then we broke above this area. So overall, it's pulling back to its kind of next support zone. It could continue to pull back a little further. Really, the bigger term support is the 20-day moving average down here, which is also this previous the initial breakout. So there's room for bonds to consolidate and potentially build a base somewhere in here before rocketing higher if the stock market does go to sell off. But overall, it is having its first pullback. Generally, the first pullback to support can be bought with a new uptrend. Looking over at gold, up 0.2%. Nothing too significant in the grand scheme of things. It's getting down into the support zone, the 20-day moving average. We'll see if it can hold its ground and continue to consolidate in a sideways pattern here. This could be a very nice pattern if it continues to hold its ground for much higher prices going forward. That's what the big picture charts are still showing. Silver up 0.4%. Again, it's just chopping around and floundering and really just consolidating. Overall, the big picture again, this big bull flag to the upside. It looks like it's turning into a much larger base, which points to much higher prices going forward. But this is a huge pattern, and it doesn't mean that price is going to move right away. This could flounder and trade sideways for who knows. It could only take a couple of days. It could last for a month or two. But the market and the pattern here is still playing out in a very bullish way. It's consolidating and digesting this recent move and testing and just kind of eating through this resistance before it potentially takes another big run. Gold miners yesterday, they were down pretty sharp. They broke a previous pivot low, kind of flushed out and ended up recovering, which is a really good sign to see them hold that ground from the open. They did close lower than the previous day, so it's still down, but the bar is a fairly positive bar. That's the type of bar when we typically see the market start to move higher after that. We'll see what kind of price action we get over the next couple of days as well. But again, we've got this big bull flag, and then it's building this base and this potential, you could argue, a cup and a handle. Really, it's just kind of another bull flag testing this resistance area. But again, big long-term picture is higher prices going forward. Looking over at natural gas was up 3% yesterday. Today it's down 1.8%, so it is still struggling with this 5-day moving average. I feel as though it's getting close to the end here, but again, the selling hasn't let off. It just continues to flounder with this series of little bear flag and then broke down, and it's forming this another little type of bear flag. Yesterday it closed above the 5-day. Today it's pulling right back below it. If it can get above there today or tomorrow and hold its ground, I think we're going to eventually see, I think, a really strong short covering rally out of here. But at this point, it just hasn't happened quite yet. Looking over at crude, up almost 3% this morning. It's having a big knee-jerk reaction. All the cycles bottomed out yesterday, and today we're getting a bounce back up to the 5-day. We've seen this happen 3 days in a row where the market hit the 5-day and then sold off. Yesterday it rallied up really strong in the morning, hit the 5-day, sold off. Here we are again. It's rallied up in the morning for the third morning. Question is it going to sell off again? And the odds are yes. The trend is down. This momentum continues to carry the weight, and overall it's trying to get back above this line. If we were to just draw a line across this chart here, right straight across here, that's level. You can see this is a very significant support zone, and the market closed below it. It came back up, hit it yesterday, then sold off. Today we're back up to that level, and we'll see if it gets rejected or can stage some type of pattern. Now, overall, if it consolidates and starts to form some type of consolidation here, I think a breakdown from this level eventually could be very significant, and see $44 per barrel being the next stop going down. So we'll see how things go. Overall, it is way overextended, really hard to try and get short and chase it, because it could have a knee-jerk reaction like this here where you just see a massive rally that can unfold day after day. You hate to get in when something's that extreme. So we'll see if it can cool off, consolidate, and then eventually start to collapse with a lot of fresh energy to the downside. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.